With the election just a few days away, let's take a look at this week's economic developments that might influence voters. Before we begin, remember to like this video and subscribe for more economic updates. Analysts expected that Hurricanes Helene and Milton, along with a labor strike at Boeing, would affect October's non-farm payroll numbers. However, the actual drop was more significant than anticipated. On Friday, the Labor Department reported that only 12,000 jobs were added in October, the smallest gain since December 2020. This number was much lower than the 108,000 jobs economists had projected and 90% below the revised 233,000 jobs added in September. The unemployment rate stayed at 4.1%, making the fifth consecutive month above 4%. Corey Staley, an economist at the Indeed Hiring Lab, stated, "While the impacts of these events are real and should not be ignored, they are likely temporary and not a signal of a collapsing job market." On Tuesday, the Labor Department released the Job Openings and Labor Turnover Survey, JOLTS, for September, revealing that openings fell much more than expected. Openings declined by 418,000 as of the last business day of September. This drop brought total openings down to 7.44 million, their lowest level in over 3.5 years. The figure was also well below August's revised 7.86 million openings and the 7.9 million openings economists had projected. Another key job metric, the National Employment Report from payroll processor ADP, painted a different picture of the labor market strength. On Wednesday, it revealed that the private sector added a substantial 233,000 jobs in October. This figure is significantly higher than the revised 159,000 jobs added in September and well above the modest 95,000 jobs economists had projected. Analysts had expected the impacts of Hurricanes Helene and Milton, along with the disruptions from the Boeing strike, would weigh down the ADP numbers. However, ADP chief economist Nella Richardson stated, "Even amid hurricane recovery, job growth was strong in October. As we round out the year, hiring in the U.S. is proving to be robust and broadly resilient." In other news, the Commerce Department announced on Thursday the September Personal Consumption Expenditures PCE Price Index, a key inflation measure, slowed to 2.1% year over year. This rate is a tenth of a point lower than August's and matches economists' expectations. It also brings annual PCE close to the Federal Reserve's 2% inflation target. However, a closer look at the numbers tells a more complex story. Monthly headline PCE rose by 0.2% last month, accelerating by 0.1% from August. Core PCE, which excludes food and gas prices, also accelerated on a monthly basis, rising by 0.3%, which is 0.1% faster than August's rate. As for annual core PCE, it came in a tenth of a point higher than projected, remaining at 2.7% for the third straight month. Finally this week, the last measure of U.S. economic output before the election suggests the economy remains relatively strong, even if it's not quite as robust as analysts had expected. On Wednesday, the Commerce Department's advanced estimate of third-quarter GDP growth showed the economy expanded at an annualized rate of 2.8%. While that's slightly below the widely projected 3% growth rate, economists seem largely content with the result and what it indicates about the nation's economic strength. In a note to clients, Oxford economics chief U.S. economist Ryan Sweet said, "Though GDP is backwards looking, it sends a clear message the economy is doing well." He added, "Trend growth in GDP remains solid, reducing the risk of a sudden and significant increase in layoffs." This increases our conviction in our above consensus forecast for growth next year. We'll be back after the election. This is Devlin Steele for Augusta Precious Metals signing out.